Here's how to build your investor list from scratch, step by step. Whether you're launching your first fund or trying to raise capital for a single deal, it all starts here, because without a list, there's no capital. Now, in the next few minutes, I'll walk you through the exact process I teach fund managers who've gone on to raise millions, starting from zero. Let's dive in. If you're raising capital for a private fund or syndication, you already know you need an investor list, but maybe you don't know where to get started. So today I'm going to give you a step-by-step guide for building an investor list from scratch. I'm Jimmy Atkinson, founder of Fund Playbook, and over the past decade, I've personally helped over 100 private funds who have collectively raised $1 billion plus in investor capital. In the next few minutes, you'll understand why having an investor list is so valuable. Plus, I'll show you some proven strategies for building your own investor list, even if you're starting from square one. And stick around till the end, because I'll also show you how to download our free guide on this subject as well. And now, let's go to the whiteboard. In a minute, I'm going to show you how to build an investor list, but first I want to paint a picture of the broader context for you and how you should be considering what to do with your investor list once you have them. And I like to think of this concept in marketing terms in a funnel. And at the top of the funnel, you have awareness. The first thing you want to do is you want to make sure that potential investors are aware of you and aware of your strategy and aware generally of what you stand for, who you are, what you're all about. As they opt in with you, you then need to build trust later on down the funnel. And then at the bottom of the funnel, this is where they actually commit, or they become investors, right? So you're going to cast a wide net, get people to become aware of you. Once they opt in with you, you continue to build upon that awareness, you build trust, and then after some time, they commit capital to your project. And not everybody who enters the funnel is going to end up committing, but a certain percentage of them will. So building your investor list is the foundation of your capital raise. It's not something you do immediately after your deck is finished, but it's something that you start right now, because relationships take time. Think of it like this. This funnel here, awareness at the top, trust in the middle, commitment at the bottom. The investor list gives you the structure to move people through this funnel intentionally. But step one is you need to define your ideal investor or ideal limited partner, or LP. So who are you actually trying to attract into your funnel? What type of list do you want to create? Are they accredited individuals? Are they real estate professionals? Founders with a recent exit, a big capital gain maybe? Are they family offices looking for capital preservation or appreciation? Be specific. And also, what's the check size? Are you looking for $25,000 chunks or $100,000 chunks of capital? Or maybe you want to set your minimum investment at $1 million. All of these decisions are going to impact who is on your ideal investor list, or the type of person that ideally is on your list. What return profile are they after? Are they after income? Are they after capital appreciation? Are they after capital preservation? What's their risk tolerance? Do they want to be hands-on? Do they want to be fully passive? When you define your ideal LP or your ideal investor, your messaging sharpens and your outreach becomes more focused. You become more aware of who exactly you want to build into your investor list. And then also your close rate will improve. So now let's go back to the whiteboard and discuss where can you actually start finding the investors. And I like to split this into two different sections here. I consider online prospects and also offline prospects. Where can you meet people on the internet, and where can you meet them in the real world? So now let's talk about online first, okay? So I like to start with social media oftentimes. I think LinkedIn is a great place to connect with people. Some other social media channels may work very well for you in addition to LinkedIn. Some people have a lot of success on X. Some people have a lot of success on other social networks, but LinkedIn is good because it's mostly professionals. Oftentimes, they have a lot of income or are high net worth. You can use filters like real estate investor or family office or private capital. You can also look at your existing network, and that can exist maybe in your personal email or your personal connections that you already have on LinkedIn or Facebook or X or elsewhere. And your strategy online should be to post insights and essentially offer value. So offer value and post insights that pertain to your investment strategy when you make posts. You don't want to pitch your deal constantly. You want to offer value. You want to lead with what it is that you're offering, what your investment strategy is, what it is you're working on. Build your track record and establish your credibility. You also may want to offer something, potentially a lead magnet, something that gets people to opt in with you. Possibly your top 5 tips for doing real estate deals, or why multifamily in the Southeast is a hot asset class right now. Whatever it is that your strategy is focused on, you have expertise on a particular topic pertaining to your investment strategy, I'm sure. So write an article or a white paper about that and then offer it as a lead magnet for people to opt in for. Say, hey, you can download this free guide to real estate investing in California, but I need your email address and your name first. And that gets people to opt in with you. You can also appear on podcasts or on webinars. And this is a great way to establish trust while leveraging the network effect of other individuals who have already built up an audience. And then I'll throw YouTube on here as well. And this could include being on other folks' YouTube channels or presenting on your own YouTube channel. Now, offline, what I like to look at is we can attend events. There's a lot of different investor events out in the world today. Real estate events, alternative investing events, private investor events. There's no shortage of these events that you can sponsor or speak at or simply attend as an attendee. You can also host dinners and roundtables. Put together your own lunch and learns or your own dinners that you kind of buy a meal for a private network of folks that have already engaged with you previously. And then you can also use your local network. This could include RIAs, lawyers, CPAs, or referrals to those types of advisors that oftentimes will collaborate with or advise high net worth investors, family offices, your potential LP targets, essentially. So every conversation that you have in both of these arenas, whether online or offline, is a potential lead if you listen more than you pitch. And again, I can't stress this highly enough. You don't want to lead with a pitch. You want to lead with the value that you offer through your experience and expertise. And you also want to listen to the problems or the opportunities of the person that you're speaking with. Understand who they are, what their desires are, or what their client's desires are. And then if it makes sense, follow up or close the conversation by saying, hey, I'd love to stay in touch with you. I'm working on such and such deal. Would it be okay if I emailed you or called you? Can I have your card? That works really well on an offline event to get a card or to swap contacts there. Online, it can oftentimes be a little bit easier if you're already reaching out to them. You may already have their contact information in many ways. I would say, particularly if you're on a podcast or YouTube or a webinar of some sort, you want to have a call to action at some point during this content where you say, hey, I'd love to share more of my knowledge with the audience here today. If you want to reach out, here's how to get in touch with me. Or you can even offer something more concrete. If you want to download my free guide to real estate investing in the Dallas-Fort Worth area, go to this URL or scan this QR code and give me your name and email address, and I'll send you that free guide. So that's another good way for folks to opt in with you. Now, once you have the leads, you need to organize them. And there's a lot of different ways to do this, and this isn't meant to be a big tutorial on putting together a CRM. Frankly, I think just an Excel spreadsheet or a Google Sheets doc is a great way to start. Now, a CRM is better if you want to build something simple like in MailChimp or Aweber, or if you want to go a little bit more complex, a little bit more enterprise level and do HubSpot. There's a lot of great solutions to track names, contact info, where they came from or the source of the lead, what kind of investor they are. You can have notes on them. You can categorize them or segment them into different categories, such as this is a family office, this is a high net worth investor or an accredited investor, this is an RIA or other type of advisor. And then you can also add a status column such as cold, warm, hot, or committed once they've actually committed capital or sent you a check. You want to update your list regularly. This could be daily, it could be weekly, it could be monthly, kind of depends on the scale of your list. And yes, you can also use tools as well. There's a lot of different LinkedIn automation tools that can help you outreach effectively. There's different calendaring apps that can help you schedule calls. I like Calendly personally. There's a lot of other apps out there that can handle that as well. And just remember, though, that the tools that you build into your CRM or your investor outreach or prospect outreach workflow, they support your process, but they don't necessarily replace it. You still need to get on there and do the work and drive those conversations and add that value. And then a couple final points. Most investors won't say yes on the first touch. If you are in a desperate need to raise $10 million in the next 2 weeks, you're in a little bit of trouble, I think, unless you have an established network. So, a lot of these tips work best if you are able to be somewhat patient with your capital raise. If you have a realistic timeline for how quickly you need to raise capital. If you're looking to raise $10 million over the next day or two, that's going to be tough. If you're looking to raise $20 or $50 million over the next 2 years, that's something that's more manageable, right? And this is where your nurture sequence comes into play. In that funnel I drew earlier, we had awareness at the top, and then we had trust in the middle. Once you have people aware of you and they opt in with you, you don't want to just leave them sitting without engaging with them. You don't want to just have them be some row in your CRM or on your Google Sheets contact list. Instead, you want to email them or get in touch with them somehow regularly. I would say at the very least, email them monthly. If you can email them something weekly, that may be even better. And it doesn't have to be some huge, long article or essay, just something short, value-packed, and personal. Share your wins, offer market insights, offer free downloads if you write a white paper or report. Tell them about the recent podcast episode that you hosted or that you appeared as a guest on. Tell them about a webinar that you're about to do or that you recently had recorded. Drive value to them. Show them value. Continue to offer them value and continue to highlight your expertise in the investment with the investment strategy that you're someday going to ask them to write a check for. And then when someone starts showing real interest, when someone says, hey, I've had a capital gain, I need to put it somewhere, or hey, I've got some cash that I want to put into some sort of investment deal, make sure you have your deck ready and make sure you have a way to get on a call with them. That's when, emails back and forth are good for that nurturing phase where you're getting them to trust you, but when you're starting to build that trust. But then once they're actually ready to invest or they're starting to show some real interest of investing, it's always good to have, if you can, an in-person sit-down meetup. But if that's not possible, at least get on the phone or a Zoom call with them and walk them through your deck or walk them through your executive summary and answer any questions that they might have live one-on-one. And then you can guide them toward either a soft commitment or send them subscription documents and actually get them to wire you money later that week. But just remember that, with all of this that we're discussing today, with building an investor list and nurturing an investor list, you have to think of it as building relationships more than just simply transactions. You're not going to get a most often than not, you're not going to get a transaction from somebody the day you meet them. You have to nurture them over a long period of time. Sometimes it can take not hours or days, but I'm talking weeks or months. And I've even seen it take years, where some fund managers have to nurture a potential prospect for a couple of years before they're finally ready. Maybe they don't have the cash right away, or maybe they have other opportunities or other priorities. And a couple of years later, though, they've been watching on YouTube, they've been reading your emails, they know you, they like you, they trust you. That's when they'll be ready to make a commitment. So just to go back to the whiteboard and offer a recap of what we discussed today. One is you want to define your ideal LP or your ideal investor. what kind of investors are you targeting? 2, you want to start sourcing those leads. Where do you find investors? I gave you some tips for where you can source them online and offline. You need to go out into the real world or stay on the internet. I consider that the real world too, though. But you need to get out there essentially and start offering value and attracting investors to come to you. 3rd, you need a CRM or some sort of system to organize all of your leads, to keep track of them, to start tagging and tracking. 4, continue to send them the right message and deliver value to them. And that goes hand in hand with number 5. The nurturing of those leads will eventually lead some of them to commit capital to your fund or real estate deal. So that's it. Pretty straightforward marketing framework. And this is the framework that I've used to help fund managers raise millions of dollars of capital over the last few years. That's all for today. Thanks for watching this video about how to build an investor list from scratch. Are you ready to download the free guide? Head to fundplaybook.com/list to download our free written guide on building an investor list from scratch. That's fundplaybook.com/list. And if you like this video today, hit that like button, give us a thumbs up. And if you have a minute, leave us a comment. You can also subscribe to Fund Playbook on YouTube or your favorite podcast listening apps. You always get our latest episodes. I release new episodes each week about how to start and raise capital for your own private fund or real estate syndication. Thanks for watching and listening. See you next time.